The impact of tariffs on your stock portfolio. Today, the stock market is down. The Dow Jones is down 270 plus points, and tariffs are the lead story. We're going to talk about how tariffs are impacting you today in your stock portfolio, and what are we going to see for the fallout from that. We're going to look at and look at some video here and see what kind of the market sentiment is around tariffs. And we're going to jump into that. And then we'll follow up looking at the state of the market as well. Okay, so let's jump into this and see what we've got here.
He's joining us this morning. Janice Henderson, Equities Portfolio Manager. Jeremiah Buckley is with us. Jeremiah, happy Friday. Good to see you.
Yeah, good morning, Carl. Thanks for having me.
I wonder if you think the impact of any kind of tariff action gets a little muted when you look at how much this White House appears to want to let the economy run hot.
Yeah, so certainly, as we've seen, we're seeing today, higher tariffs, higher tariff rates are negative for the market. Trade deals are positive for the market, and we need to see the offsets to those higher tariff rates as it does impact companies. But certainly, fortunately, we're starting from a strong base. The economy is strong. I think earnings, as we go into earnings season over the next couple of weeks, we're optimistic that we're going to see positive results.
Okay, let's pause there, right? So some good things that are here. The tariffs move the market, but we need trade deals. We need negotiated tariff deals. But ultimately, one thing he said that I 100% agree with is that we're starting from a strong base. And beyond that, the consensus is that we've got a lot of strong earnings reports coming out from the major companies and from the companies that we look to, the leaders. And so that's something that you need to kind of keep in mind as we roll forward.
The results we saw from companies in June, and Delta kicked it off, and Levi kicked it off here the last couple of days, and those results were positive too. So fortunately, we're starting from a very strong point with the economy. But ideally for the market, we'd like to see more trade deals and less increases in tariff rates.
Right. How do you think the banks next week sort of set the tone for Q2?
So I think it's going to be positive. So we saw a lot of them raise their dividends last week, which I think is a good indication of how they feel about forward growth, as well as their ability to return capital. But I think there's a number of positive catalysts. I think we'll have net interest income margins continuing to increase, not only this year, but into next year. You've seen, again, some signs of deregulation that could open them up into growing assets further. And so we've also seen capital market activity improve as M&A has picked up, as we've seen a little bit more certainty around the environment. And so all of those bode well for the banks and their ability to grow earnings here going forward.
I wanted to ask you a little bit about travel and lodging and what we're seeing here. It's been amazing to hear from the cruise lines about their bookings through the second half of this year. What do you expect to see in terms of appetite for that consumer discretionary spend?
Yeah, so the consumer continues to be healthy. We've seen real wage growth continue to be positive, up 1.5%. That bodes well for discretionary spending. Discretionary spending has grown faster than spending on staples. And we think that experiences will continue to grow faster than goods. And we've seen evidence in that in Carnival's earnings release.
That's interesting. I was going to pause there for a minute when they started talking about Carnival per se, but I like that they segued into talking about consumer discretionary spending. And obviously, consumer spending is a major driver of our economy. And so the fact that he's talking about and using discretionary spending for like cruise ships and things of that nature is a very interesting parallel. But ultimately, I like what he said is that is remaining strong. And again, I think all of these are kind of different facets of looking at, I apologize, is looking at how strong the overall economy is.
Delta, in their comments yesterday, talking about a second half improvement, as well as the premium customer continue to be strong. And so we continue to believe that the demand for travel continues to be positive. And we've seen a little bit of softness here in the U.S., but if you look globally outside the U.S., there's even more strength. And so a lot of the companies like a Booking or a Marriott have very global exposure, and so they're benefiting.
My apologies. I've got a chest cold, and it's right there. So we're going to take a look at Ed now real quickly, kind of what's going on in the market right this second. Excuse me. And I'm going to try to get rid of this cold, man, or this cough that I've got here. So real quickly, let me take you to this. And I have to switch screens here. Gotta take a look at this. Okay. And so what I want now is we want to shift our focus over here, because right now the state of the market is we're down 304%, not percent, excuse me, 304 points right there. And we're down 34 on the NASDAQ. The overall impact is escalating from this standpoint of just right here, this moment, what's going on within the stock market. But I think, again, go back to his comments, right? Go back to some of the comments that particular analyst was talking about, is that the overall economy is very strong. We're seeing consumer spending rise and be very, very healthy. We're looking at price earnings announcements coming out as far as from the major companies. We are expecting good bullish earnings calls from pretty much everybody across the board. I know there's some sectors that won't necessarily be as strong per se, but all that is adding up for a really strong rolling into the remainder of the second half of the year. And I think that's really what it comes down to. Are tariffs impacting your stock portfolio? Yes, right here, right now, they absolutely are. But as we roll forward, I think there's so many good things about the opportunities ahead and the state of the union of the market. So that's really what I'm going to leave you with. If you like what I did, please give me a like here on the video, and subscribe to the channel if you are so inclined. And I'll see you, and take care.